Good morning, trading world. It is February 16th, 2022, just after 7:35 a.m., and this is my pre-market outlook and technical analysis for day trading the SPY. We have another big report day today. Among the reports, we have CPI, which has been very crucial, retail sales, manufacturing sales, and of course, the biggest FOMC minutes release, and a few more reports today. And out of those that I listed, of course, CPI and FOMC respectively at 8:30 a.m. and 2 p.m. today are the biggest data drops today. We are in the midst of consolidation on a large time frame, the weekly. And right now we are on the positive side of that consolidation. This rather large consolidation is taking place between 456 and 438 on the SPY. News drops could knock us back a bit, but it's likely we gather and continue toward the overhead supply resistance area in the 450s, or continue to hit our head on the wall building at 447. If we get through 447, expect a nice jump because of the squeeze that's building there. So with all that, let's get to the key levels to watch for today. All right, and here we are with the key levels of the day. Starting on the resistance side, everything is pretty similar or about the same as yesterday. Starting with the Jack resistance level, 446 through 447 area. And then on to the Queen resistance, which is going to be 448 through 451 area. And then King resistance, which is going to be 452 through 454 area. On the support side, we have the Jack support at 444 through 443. Then we have Queen support at 442 through 441 area, and then King support at 437 through 435 area. The main thesis for today is bullish, closing above 446.1 with a projected high possible target of 451 through 453. Alternate thesis is bearish, closing below 446.1 with a projected low of 440 to 439. The current minor channel we are in is 453 through 443, with the major channel being 453 all the way down to 425. The reports will definitely impact the scenarios pre-market today, and at 2 p.m. as Fed minutes always do. So we're in anticipation. They had an emergency meeting, I think it was Monday or Tuesday, and we're awaiting whether they decide to actually raise rates or how much they raise rates and when that first rate hike will be. So this will be a pretty big drop today as far as the Fed minutes because of all the anticipation. So that will have a profound effect for today. So let's get into the scenarios for the day. All right, here we go with the first scenario of the day. we have an expansive range day type structure. We could get or we could look to set a decision area upper boundary around the jack resistance area before chopping lower, then possibly another try pushing boundaries higher. Because of the reports today, we're going to start this before the actual cash opening. Back here, there's a report that drops around 8:30, which is the CPI report that could put us in this fall mode, dropping us to jack support here around 444, and then getting us to build back that upward momentum, or giving us a chance to build back upward momentum before the actual cash open. And we come up to hit the jack resistance again, and possibly flirt with breaking through it and get that little bit of pushback before breaking through it, and then us basically going sideways doing our midday chop zone or lunchtime area. And then around 2 p.m. when the Fed minutes are released, we could see a huge drop again, dropping us down toward the queen support area. Could be queen, could be king support area, but giving us a big drop there. And the way that the Fed minutes work is that you're going to get two reactions. You're going to get a large first reaction and then a large second reaction. And usually the first reaction is the head fake. So if we get the down motion, this would be the head fake, and then we would get the second motion back up, and that should be the way that we should continue. So that is the expansive range day type structure, which has a probability of 37% today. There's also a chance that these moves could be exaggerated out a lot further, taking us down to hit both the king support area and possibly even touching somewhere up near the king resistance area. Because these reports, they will move markets. So, as always, there is a lot of variations on a range day. So it doesn't have to take place this way, but the key part of a range day that you can kind of take from this is that we will cross the previous close and chop back and forth usually. So I have the previous close marked here with the blue line at 446.10. So that's a key part to identifying the range day type structure. All right, let's move to the next scenario. All right, the second scenario could be our rounded reversal day type structure. We could get a continued fall toward jack or queen support area and find midday chop around either the queen or king. Should be support area. And once we find that midday chop area, the thing that's going to be unique about a rounded reversal day today is Fed minutes. So normally this would carry us out to the end of the day, but around 2 p.m. we get the Fed report, which could kind of basically give us a whole nother day type in itself. And around here we get either a down move off of the Fed minutes and then back up. So that's what we're going to look forward to. And then I advise people, especially if you're a novice, especially if you don't want to put what you have at risk, it's usually best to be flat on these reports, on the release of these reports. So just a little advice there. But this is the second scenario, looking to get continued drop from that report. We gather, try to get back, and we get knocked down again by the actual FOMC minutes. But maybe the market shows some type of resiliency and tries to pick it back up. So that's what I'm looking for. There's always a vice versa, especially on these report days. And on the rounded reversal scenario, we could have something like this take place. This could be the vice versa scenario for the rounded reversal, where we basically take off to the upside through the opening. Somehow we start to gain momentum before the cash opening, giving us a gap up opening, and we continue to take off, reaching our midday chop area where we chop sideways, start to fade the second half of the day, and at 2 p.m. we get the Fed news, which gives us this boost. We hit our heads again on resistance somewhere. That's the head fake, and then we start to come down. This actually could be a more prevalent scenario, but it'll all be based, because we have these two huge reports, it is very, very hard to handicap anything on a day with a report, much less two major reports dropping the same day. So, and at opposite ends of the day. So this is something that you may want to be prepared for, both on the vice versa end with the rounded reversal day type. And let's get to the last scenario. All right, here we have the last scenario, which could be a trend day down type structure. We open gap down and start with a rally back up toward the previous close, where we find resistance on or before the previous close, then begin that downtrend for the morning. We do the downtrend for the morning. Like a normal trend day, we reach our midday chop area, chop sideways through the midday. Then everything is pretty much dull and unexcitable until 2 p.m. And 2 p.m., when the FOMC minutes announce, we get a big jump back up and an immediately opposite reaction, and then we could possibly continue the trend down from there. So This is our trend day down structure, and I try to have a habit of, on big report days, we have to get that vice versa scenario in there, which could be the trend day up, which seems highly unlikely right now, but you never know. So the vice versa scenario, of course, trend day up, and then around 2 p.m. we get the head fake, which could actually go either way from this point. We could actually have the head fake start to the downside and pop us back up. And actually, that may be even a better way to look at it there, as far as what will happen around 2 p.m. But if you're not comfortable with your risk, again, I do advise be flat for both the CPI and the FOMC minutes, because we could go all around the world in just a few minutes. So it's definitely a good idea, if you're not comfortable with your risk, to be flat during those reports. Every day I preach and I preach, and I'm preaching to myself as much as I am to anyone else that listens. Always know your risk and profit will follow. I try to keep that as a mantra to my trading, because again, the reason why is your capital is the most important thing to your trading. So we have to protect that at all costs. With that, as always, wishing you a successful trading day. Hope you have a good one. Hope this helps in your trading today.